Hey traders, I think it's time we talked about Euro GBP, Euro Sterling on the daily time frame. As you can see here, we have had the rejection of this level here, which is very significant, just above 0.900. As you can see, if we scrunch the data up a little bit, this is the third time we've tested this level, or sorry, fourth time we've tested this level since September last year. Now, as you can see, we are at the top of a longer term range, far more longer term than the one we were initially looking at before it broke through just above 0.8898. What is significant about this one is the fact that we have an A, B, C, D completion point here. And if we draw our Fibonacci extension tool from point B to point A, we can see that we actually do have the 1.272 lining up very nicely with that horizontal level. Now, as you can see, the previous occasions where euro weakened against the British pound, we had a nice sharp rejection off the level. But what is good news about today's close, which is already closed at the time of writing this or speaking about this, is the fact that we have closed relatively a small distance into this range here, whereas the previous bars that rejected it on the 15th of November 2017 and of course on the 12th of October last year, the close is all the way down here, so quite a long way into the range here, which means that we can essentially get a more efficient entry. Now, this isn't a bearish pin bar reversal. Obviously, we would prefer it if it was, like we had here, like we had here. However, it is an inverse hammer, which is still valid. It's a decent sharp rejection of the level, overlapping very nicely with the 1.272. And if we look at the 60-minute time frame, we can see that we actually do have weakness. As you can see, we do have the breakdown of this rather steep upward trend here, and we have the break of what we can imagine to be a trend line. Let's draw it. I'm not really a fan of trend lines unless they're dead obvious, because there is a lot of kind of subjectivity when it comes to drawing trend lines, but we can't really disagree that this is a decent trend line and it's broken. So what are we going to do about this one? Well, the fact of the matter is it lines up on the daily time frame. The daily is going to be a lot stronger than the 60-minute time frame, although we've got to be mindful that the smaller time frames do ultimately drive the bigger time frames. So what are we going to do? Well, as we've identified the opportunity on the daily, we're simply going to place our trade on the daily. So we're going to place an order to sell just below the low of today, which is Thursday, stop loss above the high, and we're going to basically scale out if, as and when we get to a one-to-one profit take profit target, so that we can then have a no loss outcome. If worst comes to worst, the market comes up, euro strengthens and takes us out or triggers our stop loss. So if that happens, we'll make no loss. It might be worth bringing to your attention as well that on the previous occasions where we did see a rejection which actually followed through off this horizontal level here, we saw price going down, triggering us into what would have been the trade, then coming immediately back up. And it did happen again also on the 15th of November last year, where we had the initial trigger into the trade, like so, one-to-one, and then something came back before going down again ultimately. So in order to protect you from the inevitable roller coaster of emotions and fluctuations of your open trades in terms of profit and loss, I would certainly look at safeguarding you from that with essentially scaling out at a one-to-one. And when I say scale out, I mean buying half of the trade, or taking half the trade off, buying back half the positions, so you've banked half the profits and you've essentially or reduced your risk by half as well. Okay, so that's our plan with Euro GBP. Happy trading, folks.